Good evening, class. Today our group is here to discuss property and liability insurance. These are group members, myself, Thomas, Ari, and Mitchell. The first section we'll be discussing is home insurance and the different package policies that go within it. So first things first, why should we have home insurance in the first place? It's necessary in order to prepare for the worst possible outcomes. We don't always expect a fire or a flood to come, but in the rare instance that it does, we need to be protected. And property insurance or home insurance is valuable because it allows individuals to pool together the associated financial risks of these perils and protect us from catastrophic losses that otherwise would have been very harmful. And as with other insurances that we've discussed in the past, the real challenge doesn't really come with deciding whether or not we want to have the insurance, but instead it comes from deciding how much of the insurance we want to purchase. We don't want to be underinsured to the point where we're still facing a large risk, but on the other hand, we don't want to be wasting money by being overinsured. Now, before discussing the package policies, the typical package policies of each home insurance, we want to know what makes up a home insurance policy. And it's divided into two sections. The first section is property coverage. This portion specifies the dollar amount that the insurance company will pay for a claim. So whatever dollar amount you arrive at for this first section, that will be the maximum amount that the insurance company will pay for any given claim. And this section is broken out into four basic coverage components. Coverage A, dwelling, B, other structures, C, personal property, and D, loss of use. These will be covered in greater detail in the following slide. Until then, we have the second section, which is personal liability coverage. This portion protects policyholders from injury on their property as a result of their actions. So you're protected from liability lawsuits, although the minimum claim must be over $100,000. And as well, this section could also be viewed as a small medical insurance policy because any injuries to non-family members on your property can be insured up to $1,000 each. And this section covers most liabilities, with the only exceptions being liabilities that come from business, professional use, or negligence. Continuing this topic, as I mentioned before, the four basic coverage components, now going into greater detail. The first one, coverage A, dwelling, protects the home and any attachments to it. So you can imagine the garage of a home. If this sustains any damage, you will receive a claim and receive payment and protection for it. However, if, say, the land around the garage was damaged, you would not receive any protection based on coverage A. For coverage B, other structures, this protects other structures on the premises that are not attached to the house. For example, you can think of an outhouse or a detached garage, and this is limited to 10% of the total insurance policy. So if your home is covered for $100,000, coverage B is limited to only 10% of this, so in this case, $10,000. For coverage C, personal property, this protects any personal property used or owned by the policyholder, regardless of the location. So for instance, if you're vacationing in another country and your watch or purse gets stolen, you would be covered under coverage C. This is limited to 50% of the total insurance policy. And another instance that you're protecting coverage C would be if you're, say, hosting a party and there's a fire in the home, everyone makes out safe, but someone's property was left inside, a guest, and it was lost, you would also be covered for this. Though it is important to note there are certain exclusions that limit the amount that you could be reimbursed for. Lastly, we have coverage D. This is loss of use. This provides benefits if your home cannot be used because of an insured loss. This is broken out into three different sections. The first one is additional living expenses. So you would be reimbursed for the cost of living in another space. The second would be fair rental value. Say you're renting a room in your home for $500 a month and your home is uninhabitable for 2 months, you would be reimbursed for $1,000. And the last one is prohibited use, And with this section, you'd be reimbursed in the case that your home is declared uninhabitable by an authority. Think about an example where your neighbor has a gas leak and you're forced to move out. You would be provided or reimbursed for 2 weeks worth of living expenses. Now, with those four basic coverage components covered, the last section would be perils. And a peril is an event or happening, whether natural or man-made, that causes a financial loss. You can think of a flood, a fire, or theft as common perils. And there are types of insurance or home insurance policies, and there's different types. One being named perils, which covers a specific set of perils. If not specifically named, it is not covered. And the other being open perils, which covers all the perils except for specific exclusions. So for each home insurance policy, you'll have the two different sections. Section 1 having the four basic coverage components. Section 2 having the liability insurance. And within this, you'll have either named or open peril policies. Depending on which one you pick, that will greatly impact the coverage. Now that we understand everything that goes into a home insurance policy, we can look at package policies, which are packages that insurance companies offer their customers where they can select different packages based off of how much coverage they want or their living spaces. And homeowners policies are commonly referred to as HOs. As we can see, for our purposes, there are 6 types of policies. They're listed down below here, down on the left. There's basic, broad, all risk, renters, condominium, and older home forms. And from the image to the right, we can see that these differ based off of whether they have dwelling coverage, personal belonging coverage, liability coverage, and as well as their different peril policies. So for the first two I mentioned, these would be considered basic policies for homeowners. The first one, basic form, is a policy that provides narrow coverage. And in fact, it's so narrow that it's not covered in some states. It is a named peril policy, and some of the covered perils that you would have if you had HO1, the basic form, would be theft, fire, explosion, as well as others. The second is broad form, and this policy provides all the benefits of HO1, except it does add some more covered perils, even though it still is a named perils policy. But since it does add extra perils, it does typically cost 5 to 10% more than HO1. And some of the additional perils that are covered would be falling objects or tearing or freezing of home appliances. The third would be all risk form, and this is a policy that covers all direct physical losses to your home. This is an open perils policy as opposed to the previous two. And as a result of it being open perils, it costs 10 to 15% more than basic form. And to give you an idea of what some of the excluded perils could look like, this would be an earthquake, a war, or a nuclear accident, so highly unlikely events. And now moving on to the specialized policies for homeowners, this would include renters form, which would be a policy aimed at renters or tenants that covers personal belongings, however it does not offer personal liability insurance. And since they are renting a space and not actually owning the home, coverages A and B are not applicable in this case. Next, we have condominium, which is a policy that provides property and liability insurance for condominium or co-op owners. And finally, older homes policy that insures homes for repair costs or actual cash value rather than replacement costs, just because it makes more sense, just because you're likely to repair the home more than actually replacing it. And finally, a note that all policies do include personal liability insurance up to $100,000, as well as medical payments to others up to $1,000 per person, as we mentioned previously. And based off these different package policies, it's clear that we can see that you can select based off of how much coverage you want, or if you have a particular dwelling space, that would also make a difference in which one you pick. But now that we understand that, I can pass it on to Thomas, who's going to be talking about supplemental coverage.
Hello everyone, my name is Ari Feldman, and now we'll be talking about keeping insurance costs down. First, let's talk about where insurance costs come from. In recent years, insurance companies have turned to credit scoring models to help them identify customers who are most likely to make claims. From this strategy, companies have developed the insurance credit score. This score is based off the same information as a traditional credit score, but it's used to determine your home and auto insurance rates instead. So as your insurance credit score goes down, the higher your homeowners and automobile insurance rates will be, and vice versa. The insurance credit score is basically the same as a traditional one, except there's greater weight given to payment history and less weight given to the types of credit that you've used in the past. For whatever reason, people have identified a relationship between a person's credit score and their insurance loss ratio, which is a measure that includes claim frequency and the cost of homeowners and automobile insurance. In the graph on the left, you can see this relationship represented visually. In the 1980s, insurance companies recognized the value of this measurement and started using it to set rates. Insurance companies are always going to try to assign rates to correctly represent the cost of claims. Companies have used age and gender information to set rates for years. And for example, men pay more for auto insurance than women because according to the National Security Council, men are 69% more likely to be driving in fatal automobile accidents than women. Also, drivers aged 16 to 20 are 2 to 3 times more likely to have an automobile accident than older drivers, so rates are generally higher for younger drivers. Now we're going to discuss how to keep insurance costs down. We're going to focus on homeowners insurance here. The 3 basic factors to determine the cost of homeowners insurance are the location of your home, the type of the structure, and the level of coverage and policy type. Location affects coverage because of different crime levels and regional perils, which are earthquakes, tornadoes, hurricanes, etc. Older and less sound structures are going to cost more to insure because they're more likely to have problems. And finally, the coverage and type of policy matters because it gets more comprehensive, the more the policy will cost. Now that we know the components of homeowners insurance, we can discuss the discounts and savings that are available for it. The first of these is the high deductible discount. The deductible is the amount that you agree to pay before insurance coverage kicks in. The larger the deductible you are willing to accept, the less you pay for insurance coverage. Typically, insurance companies offer a $250 deductible and provide discounts if you're willing to accept a higher deductible. While this is a good option for savings, only take a higher deductible that you can afford. And now we can go over some of the other available discounts. Multiple policy discounts are provided by insurance companies to customers who have more than one policy with them. Many insurance companies also offer discounts from 2 to 5% for installing security and smoke detector systems, and some even offer discounts for installing sprinkler systems. Also, if you pay your insurance premiums annually, if they're paid off in one annual lump sum instead of quarterly or other payment options, most companies will give a discount. You should also consider a direct writer. A direct writer is an insurance company that does not use agents to distribute their products. This means they do not pay salaries or commissions to those would-be agents and can afford to offer lower prices directly to consumers. Next, you should shop around. Compare prices between high-quality insurers. Premiums can vary as much as 25% between these companies, and also be sure to double-check your policy and make sure you'll be receiving what you ordered. Finally, there are some common discounts for things like homes made with fire-resistant materials, homeowners over the age of 55, and brand loyalty, which basically if you stay with the same insurance policy in the same carrier for a long time, they'll give you a discount. Aside from discounts, another way to save on your insurance costs is to work on improving your credit score. You can do that by paying your bills on time, tracking your spending and making a budget to pay down debt, not canceling long-term accounts, not adding cards to increase borrowing capacity, and making sure your financial life is in order and repeating those steps. Now, just because you have purchased an insurance policy doesn't mean you're all set. An insurance policy cannot make good on an insurance company cannot make good on your policy and pay you for a loss if they don't know what you have lost and what it was worth. To provide effective protection, you'll need to establish proof of ownership and value your assets using a detailed inventory of everything you own. If you cannot prove you owned a computer worth $1,500, for example, your insurance company will not be able to reimburse you if it's stolen. To make an inventory, agents can provide you with an inventory worksheet, or you can get one online. Ideally, the inventory should be as detailed as possible and include the date of the purchase, the cost, the model number, the serial number, and brand name for every item. When your inventory is complete, you should keep it in a safe place outside of your home, like a safety deposit box or a family member's home. Why not keep it yourself? If your house burns down or endures a natural disaster, you would lose all of your belongings and the inventory that used to track them. Now we can go over how to collect the loss, and in this checklist, we'll walk through it. First, you're going to report all of your losses immediately. In a case of a theft, report the incident immediately to the police. If a credit or ATM card is stolen, you should also notify the issuing company. In addition, you should notify your insurance agent. Make temporary repairs to protect your property. If your house has sustained damage and your insurance agent hasn't had the time to inspect it, don't let the damage sit untouched. Board up broken windows and holes in the roof or walls and prevent any further damage and protect your home against further theft. Make a detailed list of everything lost or damaged, which is where your inventory comes in. You'll put together a detailed list describing the items that were lost or damaged and present their value on this list to your insurance agent and the police. You'll maintain your records of insurance settlement process, so you'll keep records of all your expenses, and then you'll confirm your adjuster's estimate. Your insurance company will send an adjuster to evaluate the claim and recommend the insurance company a dollar amount for the settlement. Before settling, get an estimate from a local contractor on how much repairs will cost. Don't agree to anything less than fair settlement. From here, that concludes my section. I'll be passing it off for part 4.
So welcome to part 4 of our presentation. My name is Michele Di Carlo and I will be talking about automobile insurance and filing a claim. Automobile insurance. Most of us have been through the process of getting auto insurance for our cars since in Florida it's allowed to have auto insurance. Most auto insurance policies are what are called PAP, Personal Automobile Insurance Policy, which is a standard among the industry. Each policy contains both property damage coverage and liability. The, each insurance is packages is divided into four main components that is mostly standard among the industry. The four basic parts are the part A is liability insurance. This coverage protection if you are legally liable for bodily injury and property damage caused by your automobile, including judgment awarded, court fees, and legal defenses. The Part B is medical expenses. This covers the medical bills to you and your passengers in case of an emergency, including funeral expenses. The Part C is uninsured motorist protection. This is required by many states and covers bodily injury if crash or an accident happens with an uninsured driver. And the Part D is damage to your automobile coverage. This is not collision or comprehensive insurance. Covers any damage that happened to your car if you crash with something that is not a car, and although if it's a car, it also covers it, and it also covers a theft of your car. How to read your insurance policy? There are two types of insurance quote. The most common is quoted as a split limit coverage. This separates what is the maximum that coverage for each category, and is right like it's written like this. For example, always the first number, in this case 200,000, is for bodily liability coverage, meaning that the person at most will receive 200,000 in liabilities for losses. The second number is the maximum total for each accident. The sum of all the payments that the insurance is gonna be capped at 600,000. And the last one is for property damage and liability coverage. That means that will be paid out in the maximum that will be paid out in total for property damage and liability costs of an accident. The other one is the combined single limit coverage. It is quotes a total number for what will be in an accident. So in this case, it's 100,000 is the total liability insurance. Both liability and property losses in an accident might be capped at $100,000. What is not covered by PAP insurance? If you unintentional damage your vehicle or injure something, if you drive a vehicle without the owner's consent, you can lend your car and it will still be covered by your insurance only if you give consent to that driver. Using a vehicle with fewer than four wheels, for example, if you get a car without and your tire is exploded and you continue driving, it will not be covered by insurance unless if an accident. Of course, if you do it by accident, it will cover it, but if it's on purpose, it will not cover it. Using another person's vehicle regularly, if you use someone's vehicle on a regular basis and you are not on their insurance policy, they will most likely void the insurance and not pay anything. If you have a car that is not listed on your insurance policy and you use it, it will most likely continue with your insurance. It will not be covered. If you use your vehicle for commercial purposes or carrying passengers for a fee and you don't have an insurance that is comprehended for that or is intended for that, it will be voided in case of an accident. Or if you drive on a race or a speed contest, your insurance will not cover damages or accidents that will be caused as a part of it. No fault insurance. There are several states that require this. This makes the insurance company protects you in the case of an accident, regardless who is at fault. Over half of the United States have this system, including Florida. Florida has a no fault state, and imposes limit on medical expenses and other claims that might not be covered by all. If a car crashes you and the insurance is not enough to cover your expenses, your insurance needs to pay the difference, although it was not your fault, the accident. There are many determinants of the cost of the insurance. First, the type of automobile. If you have a sports car, it will be more expensive than if you have a regular car. The use of your automobile, if it's a car that you only use for vacation or to go to work, the price will vary. Your driver's personal characteristics, your driving record. Of course, if you have multiple tickets and multiple accidents, your insurance will go up. Where do you live? Insurance in Miami will be more expensive than insurance in a rural low traffic area because in Miami there is a more highest accident rate. The discounts you qualify for when you are quoting insurance. If you're a student and have more than 3.5 GPA, you get a discount. If you're members of some fraternities, you also get a discount. There are many companies offer discount. If you're a veteran, you get a discount. Your credit score impact your insurance rate. So if you have a higher credit score, you will get a lower rate. So keeping your insurance costs down. Shop comparatively. You should go and look for many quotes since the companies sometimes quote, most of the time will quote you very different prices. Consider only high quality insurance. You can get a quote for a cheaper quote for low rating insurance, but at the end it will prove more expensive because at the time of the accident will be a hassle to pay or they will not pay. So you better stick. It's recommended to stick to large companies like Geico, State Farms, Progressive. Take advantage of all the discounts. They are not going to give it to you instead you ask for them. Buy a car that is relatively inexpensive to insure if you're on a budget, of course. Instead of buying a sports car, a two-door car, buy a four-door car. This will actually lower your insurance cost, improve your driving records, avoid getting tickets or being on accidents. Raise your deductible. Your deductible is what you pay in an accident. So, for example, if you get on a $10,000 crash and your deductible is $500, you pay the $500 and the insurance will cover the rest. If you raise this, your monthly payment will be decreased. If you are a safe driver, this can actually benefit you. And keep the adequate liability insurance for the car you drive and for the area you live. Filing a claim. In case you got on an accident, it's very important to know what to do. At the time of the accident, the most important thing is to get help for the people that is injured. You need to move the car. If you got an accident in the middle of the highway, it's safer, if it's possible, to move the car out of the way. Get identification of all witnesses that saw the accident in case this goes to court. Cooperate with the police so they can write an adequate report. If you believe the other driver is intoxicated, make them test and you as well, and a DUI test. Because although it might be your fault, but if they are in a DUI, you will win the crash. Write down your recollection of the accident at the time of the accident, since the more away you are from the accident, most likely you are to forgot some things. Don't sign or admit guilt to anything. It's better to contact a lawyer at the moment and do not get information if it's your fault. It's better to don't admit guilt and contact a lawyer. Get a copy of the police report and make sure it's accurate. Of course, you need to compare it to your facts. After the crash, you need to call your insurance agent as soon as possible to file a claim. Their number is usually on their webpage. You cooperate with insurance. You tell them the story. Always stick to one story. Do not change it. It's the truth. Just stick to the truth. Cooperate with your insurance. Keep record of all expenditures associated with the accident because they most likely will be covered by your insurance. If it's a serious accident, meet with a lawyer and know your rights. If you kill someone or you injure severely something, always it's better to go with a lawyer. So thank you for your attention.